Welcome to a Bitcoin Live presentation. This is a Q&A with Dean of Bitcoin Live. Thank you everybody for tuning in. I'm going to be turning it over to Dean shortly. As I said, this will be a Q&A, so as you can see in that chat window on the side, I'll be monitoring it. Please type in any of your questions. I'll be passing them along to Dean. Dean, this is a real treat. I know you're going to be talking about a couple of charts, so I'm going to turn it over to you right now.
Thanks, Joe. Okay, I'm ready to get right into it here. Welcome, Bitcoin Live members. Basically, I want to look at this EOS USD chart, and hopefully it's coming through clear as we speak here. I'm trying to blow this chart up as large as I can on my bigger screen here. But what I've noticed in this chart is we have a very uniform ABC correction. So we have the A leg down, B leg up, and C leg down, right to the 50 SMA on the weekly chart, the 50 simple moving average, and a nice clean ABC pullback back to support. Support being this consolidation and previous breakout area. So at this point, what I'm watching for is a rotation back up before I get long, because at this point we have the formation of a pattern that has potential for a nice bounce play, but without confirmation, it's only an idea. For me to get involved in a long trade, I need confirmation, and therefore I'll be going to the daily chart. Okay, and what I want to see here after this ABC, and I'll blow it up again here so you guys can see it. And I'll just move that A portion over if I can. Oh, it doesn't matter. That's not the point of the daily here. Is I need a rotation back over this high here of 741.10, okay? At this point, the high of 716.70 is not going to do it for me. I need both of these highs taken out before I can assume a half long position. And why I do that is I don't have the full confirmation yet, so I don't want to open myself up to too large a risk, and therefore I do buy in increments. So if I get over 745, I'll buy half as noted here. And then I'll be adding the rest on a weekly reversal, back to the weekly chart. Okay, on a weekly reversal, that'll be 872.46, 8.7246. So for me, back over 875 would be add the next half of the trade, and I'd be raising my stop at that point. Initially, I would use a 6.69 H4 candle close as a stop. Therefore, what that means is I need a 4-hour candle closing price below 669 in order for me to exit and say I'm wrong. Now that's only on the half. Once we get a weekly reversal and we can add the rest to the long play, which would be over the previous week's high, then I would move my stop up accordingly. And that would be based on, back to the daily, that would be based on this rotation. So my stop would likely at that point might be raised up to around 650. Let's see. Let me make sure I give you the right. Okay, right now that stop would be at 669. It would stay at 669 until I got the weekly reversal. And if I got the weekly reversal, then I would go to the previous week's low. And in this case, we don't know because we haven't got the reversal. That'll happen next week. I'll be using that new week's candle low as a stop on an H4 basis. So the pattern is very simple to me. It's a clean ABC. I don't want to get too involved in counting other waves or anything else. We want to simplify the pattern in order to have a nice clean entry with a defined stop. Okay, that's one. Number two, on strength, when we gain confidence, we can add the rest, and therefore we can start looking for targets. And how I got my target one, which is 1085, 1095, it comes in at these candle highs, okay, which is 1090. That would be my number one spot. And then number two spot, I would bring out the fibs. And I like to use fibs for spots of exit because they've been very good to me in the past. So therefore, I continue to use them until they stop working. And I'd be looking at the next area would be in the 1290, which would be the 0.382 retrace of this current down move, 1290 to 13 area. And then finally, I'd be looking for the 1490 to 1520 area. So it could turn out to be a big trade. We don't know that yet. But what we have is, we have the makings of a nice clean setup. Okay, let's move on to LTC, which I spoke about recently. And also, again, very simply put, we are back to the ignition area. Okay, this is where we ignited from. I call that an ignition candle right here and right here, these lows. Okay, and this, to me, this was where it ignited around 67 low, and then it took off on a monster move higher. And then, of course, you know, we had the clean waves down here back to support and back into the ignition area, and also this consolidation in here. So what I look for here is two things. Either we break down and close below the 70 area, and then I think we can drop to 37 to 42. So I'm still leaning down on LTC unless it reverses. And that would take us right back to this 200 SMA area and also these lows from, you know, back in October and September of 2017. So keep that in mind. We might have a really nice short trade. In addition, I'm watching the volume recently, and I'm going to try to get that up here. Let's see here. Well, I don't have it on here right now, and since I'm not a complete expert on this trading view yet, I usually use NinjaTrader and Thinkorswim and TradeStation in the past, but I'm trying to get Bitcoin and everything else, all the other cryptos on NinjaTrader, because I really liking that platform lately. I've been using that to trade E-mini futures and NASDAQ futures and Dow futures, etc. So the volume has been going down. I'll just describe it. The volume during this grind lower has been going down and almost, you know, 1/3 or 1/4 of what it was during this area where we took off, okay? Which is not unusual. So in order for me to look and see for an increase in volume and to think that we're stopping the decline and reversing, I need to see an increase in volume, and I need at least a weekly reversal. But my preference as a swing trader is always going to be a monthly reversal. So it might be that the rest of this month we just watch this until and if it gets back over 90 next month, okay, in order to be long. And at that point, I'd be looking for at least 125, 130, maybe even up to here in the 160 area. But that's something that just to keep your eye on and sit and wait. We want to catch the fat pitch. We don't want to catch the little nickels and dimes. At least that's how I trade. So what we're looking for here, either or, a breakdown of the 70 area, which would take us down to this mid-40s and maybe even the high 30s, or we stabilize in here and maybe we get a 4x or a 3x weekly reversal to get us in a quarter or half size. And what I mean by 3x or 4x, I'm talking about 1, 2, 3 candle highs. And in this case, that would be back over 90, okay? So just, it's kind of a sit tight. We close below 72 or 70, then I'm looking short. We get back over that 3-week X high candle and or reverse next month, we get long. There's no need to chop yourself out, you know, up in the meantime. Those are the two charts I wanted to focus on. I mean, there's, you know, I'll look at Bitcoin quickly here. Sorry about the background noise. That's just some alerts going off on some other stuff. But, you know, everybody keeps talking about the potential on the daily of an inverse head and shoulders, but, you know, left, head, right. But it's nothing until it confirms, okay? So if we don't get back over 6,900, for example, or close back over 6,900, this is nothing. And it's just a continuation of the current decline. We're not going to get bullish without any verification. You know, this has been a grind lower. You know, it just seems like it's back at support, and it is. Support's around 5,500 to the 6,000 area. You know, wide band of support. So we sit tight and wait for it to reverse on a monthly basis, okay? And I would absolutely love a close inside month like this. I'd love it to close just like this. And then next month, if we get back over 68.50, I would be very, very positive on a short-term long trade with a swing potential of at least, you know, 75, 7,600, but likely even higher. Okay, so these are the fat pitches I'm sitting on right now. I'm not in a rush to jump on any of them until I get confirmation. So I'm ready to, you know, take some questions from anyone that has interest in discussing what I just went through. Okay. Stop. How do I determine stops in general? Is it a hard rule, set amount of risk, or using the pattern chart to determine? I typically use a pattern chart to determine my stop rules. I typically like to use closing basis stops, like at least 80% of the time. But that all depends on how, closely I can watch the market. Obviously, I'm going to use hard stops when I'm not able to watch. So if I'm not in front of the screens, I'm using a hard stop. And I have a stop that's called a disaster or insurance stop in at all times when I'm away from the screen. So that's kind of what I do. I typically prefer closing basis stops, on an H1, which is hourly candle, or H4, 4-hour candle, daily closes. But that's when I can monitor. So it's kind of flexible, my thinking on stops. I always have a stop in that keeps me from encountering a disastrous loss, which is what you want to avoid. You can take a lot of small losses, but you're always looking to let the profits run, and that's when you can capitalize. Hope that helps. Okay, the main difference between crypto and other markets, it's just not regulated as much. That would be one of my main, main differences I see. So my level of trust can be considered substantially lower as a result. That doesn't mean that other markets are not manipulated, and they are. But at the same time, there's some kind of regulation which makes a difference in my confidence level as far as crypto versus other markets. The other thing I see is the moves are larger on a daily basis typically and quicker, less time than other markets. Most other markets, of course, other markets can have monstrous moves, as we've seen recently in crude oil, etc. So yeah, absolutely quicker moves, larger percentage moves in a shorter time span. ETC. Well, let me look at it. ETC USD, and I've got the BitX on here. Okay, it seems to be forming higher lows. Yeah, okay, here's what I would say about ETC. I like the fact that we had a left ahead and a right shoulder. In order for me to be more confident, I'd like to see it close back above this 1850-ish area for now. And also, if you want to trade it on a shorter term time basis, we have two lows here just above the 50 SMA on the daily, or two highs, sorry, that are close together. So you do have a bit of a 2X type setup. And by 2X, I mean two daily high candles, one being 1673.3 and the other one being 1646. So if it gets back over 1675-ish, that would pique some interest in a long play. In addition to that one, looking at it, next week we can go 2X down or up. What I mean by that is, see the two candles, they have very similar highs and lows. So next week, if this thing breaks down below 1560, I'm going to be bearish. If it breaks up above 1899 or 19, let's call it, I can be short-term bullish. So I let the price convince me as to what will happen next. I don't try to predict the future because nobody can. Nobody has a crystal ball. So I just let price dictate what I do, and you kind of size accordingly using a tight stop or a stop that gives you a 3-4 to 1 R&R, preferably. So keep an eye on those levels that I mentioned. I think they're key. And I would definitely not be opposed to getting long for a short-term trade if it got over 1675. Futures ETS. No, and I'll tell you why. I never factor in news because I'm a price technical trader. So to me, price always gives me the information I need, either before or after the news. Sometimes, like the old saying of, buy the rumor, sell the fact, that kind of deal. If price is high and bad news comes out, yeah, then I'll look at it and maybe consider it a problem and an exit a trade. But if the price is low on that same news, most of the time, or many times, you won't see price decline because it's already priced. It's already priced in. The news is already priced in of the binary event. Request for NEO chart analysis. Well, I will see what I can do for you. NEO USD. No, I don't want that. Here we go. All right. Let's just see what that looks like. NEO USD is what I'm going to analyze for you. Let me finish the NEO, and then I'll answer the next question. Okay, NEO. If you can still see my chart, I'm sure you can. Weekly inside week, so nothing for me yet. Next week, if it gets back over 39.25 and we remain an inside candle as we are now, I can get bullish for a bounce play. That's about it. Daily wise, let's look and see how that is. 1, 2, 3. Maybe 5-wave decline, but messy down to an area of support. But let's look at the monthly. Not a lot of data there. Obviously, support's right here. So your support's going to be in the 30 area. We've been as low as 27. Ideally, looking at this chart right now, as we close like this on the weekly, as I just showed you, and or we close like this in the monthly, an inside month with this inverted candle, and we get back over 49 next month, that would be pretty bullish for me and likely would get, garner my interest. How much risk do you take on each trade idea? Well, I'm mainly a futures trader, and I've been trading crypto off and on for the last 3 years or so. It's very similar. I use a couple of methods to calculate trade size, and I don't have something that I can show you right now. But next time I do the video, what I'll do, how futures trading works and any difference in crypto. Next time I do a video, what I'll do is I'll bring out my calculator on how to calculate size on trades, and that's how I control risk along with a stop in there, or risk area that I use based on the pattern. Okay, I'll go more into detail, but I want to do that. And typically I trade very small for my account size because I already went through the stage of life where I traded aggressively, and I'm not in need to do that anymore. But I think there's a standard way that you can calculate risk and position size that'll help you with longevity. And I do have a video handy for next time, and I'll show you. We'll go through it together on a video, so take note of that. Can you explain some based on how futures trading works? Well, futures trading is, it's fully regulated. There's only about 20 things you can look at, for example. That's rounding it off. Currencies, bonds, softs like cocoa, sugar, coffee, grains, soybeans, corn, wheat, bean meal, etc. And then indices, which is the Dow, the NASDAQ, the Nikkei, the E-mini, S&P, the Russell, okay? Those are kind of the main things I stick to, and then currencies, obviously. And once in a while I'll trade the meats also. And so there's a more limited amount of things to look at. There's there's a sustained volume and across many of the bigger trading futures. And that's one of the big differences. In addition to that, I have like 25 plus years of experience trading futures. So I have gained a confidence just through time in trading them. And I don't have a problem with the leverage at all because I don't trade large vis-a-vis my account size. Now, one of the things that I've noticed about the futures, I know a lot of people like to, have a $10,000 or $20,000 account and trade 5 contracts in the E-mini futures. Okay, I believe you should have 1 contract traded per 25 to 35,000 in your account, and that's to me even sort of aggressive. So that's one of the things I think people over leverage with their trading, and that's one of their downfalls based on their account size. So the big, that's the big difference. Any other questions? Do you use Forex strategies? No, I do not. I don't use any Forex strategies whatsoever. I trade just against the US dollar. My general thinking when it comes to trading is to simplify in order to perform better. If you overexpand your markets and you're out of your comfort zone, you're not going to trade with confidence, and as a result, your psyche gets affected and the whole trade gets thrown off. You got to trade with confidence, and to me, simplifying, just going against what I know, the USD, for example, in the cryptos and any other market that I trade. I don't use a lot of Forex strategies per se, and I don't trade Forex. I trade currency futures, which is similar, very similar. It's just that's how I like to keep it in my wheelhouse in the things that I know. So guys, let's wrap it up with that. I hope you enjoyed what we did here. I did, and I would like to do it again soon and maybe go through some of the position size strategies that I use.
All right, Dean, thank you so much.
Thank you.
All right, guys, I will post the video on Bitcoin Live shortly. Thanks again for tuning in.
Thanks, guys. Cheers.